guys, today's vlog's going to be a bit of a recap about what I've been up to over the last week on my learning to stocks trading journey, and also take a bit of a closer look at the kind of stocks I'm going to be looking to trade. First things first, I really struggle to work and focus in a messy room, so I've given my office a really good tidy, good clear out and a bit of a spruce. I am planning on decorating and painting the walls a different colour in the near future, so you might see it a different colour on future videos, but for now, just a good tidy makes me get in the zone. I've also been tuning into Roland Wolf's live daily webinars still, which are 30 minutes Monday to Friday. And again, I'm still just trying to follow along and just pick up any information that I can. I'm pleased to say there were a couple of trades that he was talking about, which I did actually understand what was going on there. So I was quite excited about that. Like, yes, I've actually understood something. So I might do a separate video and actually look at one of those players that was in action, just because I think it's kind of cool to learn something and actually see it play out. I've then been doing 30 minutes to an hour studying video training footage that my brother has recommended I look at, which I did speak about in the previous video. I'm currently going through Roland Wolf's content at the moment, and I've still got a few hours left to watch. So I've just been going over that really. As I said, I've done over 70 hours watching video footage at the moment, but still got a bit more to go. As I'm not trading yet, obviously I can't talk about any trades that I've taken because there isn't any, but I thought it might be good to share some of the things that I've been learning. The training, it's been like a mix of things. So starting out from the basics about what equipment and software I should need, what a candle is. And I already had an understanding of some of these things and some of the basics, but it was definitely good to watch it from scratch. Also been learning about scans, so how to find stocks to trade, catalysts, so what moves a stock, patterns on charts, risks and where you can risk off and your risk to reward ratio. So a lot of things that go, a bit more in depth. So rather than go into all those things right now, I thought it might be good to kind of zoom out and look at the bigger picture of what kind of stocks I'm going to be looking to trade and how these stocks typically move. So this is something that Tim Sykes teaches, and he basically teaches that there's a life cycle or a penny stock framework, I think he calls it. And I've just been watching his material and learning that basically these stocks are really high risk, dangerous companies, and they can spike and they can crash. So very volatile, but if you can kind of be informed about how they move, then you can take advantage of it and make profit. So what Tim Sykes teaches is that there's 7 steps to a penny stock's life cycle typically. And as I said, they can spike and then crash. So that's really important for me to know, so that I need to have a really tight risk in place and really strict criteria for me to think, okay, this is a high probability setup where I could make money, but if I don't, my risk is really tight that I'm not going to lose a lot either. Right, so if I just switch to a screen, I can kind of walk through what I've been learning. Excuse the paint samples on the wall, which you can probably see in the background, but as I said, I might be decorating in a few weeks, so just try and have a few colours there. This chart is kind of demonstrating the life cycle of a penny stock, according to Tim Sykes, and this is just taken straight off his website, so you can go and find it yourself if you want. So as I said, there's 7 steps to the cycle of a penny stock typically. And what he explains is each step basically. So number 1, which is here, is kind of the pre or early pump. So you're kind of trying to predict upcoming hype or promotions, or a company says that they're launching a new product in a few weeks, so you think it might be something that's going to move, and you're trying to get in early before everybody else. Or this company's got a good product or a big investor, and maybe the market will jump onto this soon. So it's kind of like you're hoping, you don't really know what's going to happen, but you're just trying to predict. And it could be sort of like this, nothing's really happening, it's just sort of sideways kind of action. So something that you might take if you're a patient trader or long-term investor, it can take weeks Not something I'm going to be looking to trade, but he's just explaining that that is a part of the cycle, and it can be played. All of them can be played. Just depends on what kind of patterns you're going to be looking at. And then there's number 2, which is kind of this section here. This is what he calls the ramp. So it's when the stock is breaking out of this level, and significantly, not just like a tiny bit. So it's where it's gotten above this key level that hasn't been broken in a few sort of days, weeks or months. So yeah, it's just kind of ramping up, hence why it's called the ramp. Then he goes to number 3, which he calls the supernova. So basically the stock is going parabolic. It was going up either like 20 to 1,000% in the space of a few hours or maybe days, which is what you can see here. Then there's number 4, which he calls the cliff dive. And this is this whole red section here. And this is where momentum dies and this stock crashes. And basically this is kind of like the front side of the move, and then this is what he will class as the back side of the move. Momentum is lost basically. Stock crashes, people start to panic as well. That's that one. Number 5 is a dip buy, which is sort of the bottom of this first crash here, and then you get a nice bounce. So it's an opportunity to get in and out quickly, basically. It's kind of people that have missed this run up as well. Once it crashes, they kind of want to get back in. So you've got those people wanting to buy, and you've also got people that have shorted the stock from up here. So they're betting that the stock is going to come back down from here. So they want to then take their profit here. So essentially, if you're shorting, you're selling stock here and you're buying it back here. So you've got the shorts coming in, covering, which is causing the stock to go back up. And you've also got people that have missed the run up that also want to get in and get a piece of the action. So there's 2 groups of people wanting to buy into this crash, if that makes sense. That's kind of my understanding of it anyway. Then you've got number 6 here, which is the dead pump bounce. So stock is basically just going to do some bouncing about until it ultimately collapses. So what you can see here is it's bounced, but it's come back down, and you might get several of those. The long kiss goodnight then is number 7. Basically, it's an extended gradual decline into basically nothing. The move is over. So it's not an exact science. It's not always going to be 1, 2, 3, 4, 5, 6, 7. You might just get certain parts of it in the life cycle of a penny stock. I'm looking to play them on specific parts of these steps. So I'm learning to trade them on number 3, so when the stock shoots up, and also number 5, so this kind of dip buy area where the stock can bounce after big panic, after it's gone, after it's had this big run up here. So obviously you can trade them in all different ways. People will be more focused on shorting stocks, so they might be looking at more of a number 4, betting that the stock's going to go down. I've decided to go with trading stocks long rather than short. So, buying them lower and then selling them when they get higher. So I've chosen to go long over short for a few reasons. One is that I'm learning from Roland Wolf, and that is what he does. He's a long trader, so that's what I'm going to learn. Also a safety thing, if you're short in stocks, you can lose a lot more money than you've got. And it's not as easy when you're using a broker to find shares to short, whereas going long is kind of the norm, really. So yeah, I'm going to be learning how to trade stocks in this area and this area, and then obviously learning how to identify entry and exit points and patterns like within these days. But this is just like the broader kind of overview. I think that's probably it for today, but that's a bit of an overview of the type of stocks I'm looking to trade and what their lifespan will typically look like. I'm quite enjoying making these videos because trying to actually explain it is actually helping me to understand it better. So I hope this has been interesting, and thanks for watching.